Hey, what's going on, everyone? It's Flexing Joe. I'm back with a quick video to answer a question that I received in the House of Stacks. So, the question was how did you figure out that the 26,020 line in the sand for the sellers? You were spot on. So, I'm going to go ahead and break this down for you guys. Here's the messages that I posted in the House of Stacks around 9 a.m. this morning, explaining that there were some overlapping gaps above on VIX, explaining where the gaps were on NQ, and right here saying that we could see 26,020 or higher depending on the strength of the move and the volatility, but I think sellers will defend there. So let's get into it and break it down. Okay, so first things first, let's start with the VIX. I understand that my chart is pretty loaded with, a lot of different lines, etc. I will try to keep you guys on track and explain what's what. So, first things first, what we saw was in pre-market, the VIX was rejecting this like purpley line that goes across here. This is the daily 50 EMA. So VIX had popped up, right? And it had rejected the daily 50 EMA. If you notice that this same time where VIX was rejecting here was also when NQ was bouncing off of its daily 20 EMA. So you have the confluence there for long. You have the opening range on the London session break, right? Comes down. You have an inverted hammer there at the bottom, and then it's reclaimed, and VIX continues to die, and the market continues to climb back up, right? Slowly, just make its stairway up. So on the VIX, um, seeing that this was rejecting these gaps and just rejecting this daily EMA, is I don't count the gaps filled until we fill them in RTH. What happened? We came down through here. We broke through the daily 20. I'm sorry, the 10-minute 20 EMA. I only watch the 10-minute chart, and we flush lower. I want to go down to the 1-minute chart to draw your attention to something that is important that happens every single day, and it is important to understand what is happening at the open. So, sorry, 1 second. Let me get to where we are. Okay. Here we are. Here's today's open. This is the 925 candle, which means that it finishes at 926. All right. The next candle is 931. Right. So there's 6 minutes of delay here on the VIX. So if you're using VIX or if you're watching it to understand what the market's doing, the volatility, etc., you have to understand that then when you have this delay, waiting for this to open and then decide kind of where it's going, that initial move, right? And does it align with everything else you're seeing will help make understanding the price action at the open a little bit easier. Can also help you from getting run over if you just think, hey, this should be a short, right? But going back to that 10-minute chart, what had happened, we did have a flip long on VIX right into the 10-minute 20 EMA, and then boom, gap down flush flipping the other way, right? So that especially at a 16 rejection right here, 1598, which is called 16, was pretty telling for what the market was going to do. The EMAs, right? The 9 is below 20, and we're starting to look and flip bearish. As the day progressed, I want to call out as the day progressed and VIX exceeded its ATR, right? Got to its ATR, exceeded it. What did you see here? These candles were compressing and getting tighter and getting tighter and getting tighter. So when I mentioned the volatility, this is what I was talking about, right? The lack of volatility, the lack of VIX expanding downward is going to put upward pressure on the market, right? Like where the market's trying to move up and it's just kind of stifling it and holding, a lower ceiling. Okay. Also, you have what is the gap up from Friday's close to Monday's open. What happened? We fell right into the golden zone right here between the 50 and the 61 EMA of that gap up. This dark yellow line is also the 50% EMA of last week's VIX price action. So even more things just starting to slow it down here. And like I said, depends on the strength of the move and the volatility. All of this, and seeing these tight candles over and over and over again leads me to believe that the idea is still intact that we would potentially be stopping there. Going back to NQ, what did you see about what happened on the open? And I'm just covering this because I think it could help a lot of people to understand the big initial price move and then how we fizzled out. So we had a candle by candle flip short here, right? The bears took over. You have a nice bearish engulfing candle. It's instantly reclaimed. And then from there on, although they don't flip the candle by candle back long, They have they make a couple stabs at it, one, two, right, and then three, right into the open. They defend the 10-minute 20 EMA, and they never close another 10-minute candle below the candle that flips short. So really, even if you had bought anywhere in here with a reasonable stop, like, you would really never get stopped, and of course you would have opportunities to take good profit too. But if you were just waiting and watching, as most people should do off of the open, and that's what I said I was doing this morning, that's exactly what I did. It helped me out. So if you're doing those things, you can see, wait a second, they're not able to close lower with strength. Okay. So just follow along for that. And let's go to ES. Similar look. ES flips short, ends up flipping back long, flips back short. And then, regardless of either of these two flip shorts, there is never another candle that closes lower. And the 10-minute candle by candle flips long right before the open. And again, you're having the 10-minute 20 EMA being defended. Okay. Now we've got all of that out of the way, and you get the initial move, the initial pop up move, et cetera, et cetera. Um, if we just quickly look at that move, right? Because we had gap down considerably. You see we fly right through the golden zone of that gap down. That's this green EMA here. I'm sorry, that's the green fib retracement. Again, I know I have a lot going on. We move down, we break up through right through that golden zone. So sellers are unable to defend. Move right back down here. We tap this and we go. When we fill the gap right here, what happens? We come back down, we retest a 61 fib, and we move back up. No candle by candle flip shorts, no strong bearish engulfing, nothing that says that the price action is rejecting and going to go back lower. It does look like an orb high fake out. And if you took it and you sold anywhere up here, that's fine. But once you get down, especially below, the 80s, right? That's really where you need to start thinking about taking profit and looking to potentially reverse direction to go back up, because you can see that the buyers are really trying to defend, and as smaller time frames, you see how they're defending. All right. So I know I'm getting a little bit off track from the initial question, but it all ties into what ends up happening, because from there we end up pushing up. ES fills its gap as well. And if you look at half of a measured move, so consider how big the gap is, half of the measured move is again the first target. Once we clear that, you break, you base on the gap fill, you base on the 4 p.m. close from Friday, you push up to the measured move. There is more confluence at the same time for this is the top. This is an objective that's hit. This is also a new all time high. Everything's set up. Boom, it's there. So here's your confluence, right? That the top is nearing, and then this. How did I arrive at these levels? So let's go to a 30-minute chart. I'm going to remove all EMAs, the majority of drawings, etc. Make this a whole lot easier to follow. Where this gap originates is on October 31st, we closed here just below the 26,000 mark and we gapped up, right? This was a strong move. This looked very strong in pre-market. And then what happened? It just really fizzled out. And we went and nearly filled that entire gap on the same day it was created. From there, we gapped down over it, right? So we had another gap down that was very strong. This was, I think, 368-point gap down, which is huge. So when we get these big gaps of 300 points plus, I like to draw additional fib levels like the 38, which often gets respected, right? So you see that the 38 fib in RTH was respected here, and I'll scroll over and you'll see it was respected more times later. When we gap over a gap like this, and then we have this big unfilled portion, and at the time of when this gap would have been created, what I would have done is I would have had this big zone that looked like this. So now you have like the heart of this green zone here, which is the unfilled gap up, becomes like the heart of another unfilled gap zone from here that from the first day, right? So that's why I draw the shaded box, because the shaded box helps me understand, like, here's the fib, 100%, 0% is the gap. Then I have the levels in between, and the shaded box is what's not filled of that gap. Okay. So I know that price action is going to try to like drift in through there and fill that void of RTH orders. I feel, based off of my technical analysis, my research, my back testing, that this is more important and only matters during RTH because there's such a bigger percentage of traders present during the RTH, 9:30 to 4 p.m. Eastern time. So this, what I call the heart of the gap there, is still unfilled, and that tops out at 26,015. The full bill breaker range is 26,020. So as we continue to look at this and we scroll over, right? So that's in pre-market, after hours. Here, it doesn't even get to the 38. Here, it doesn't even break that prior day's high before rejecting. And these are pretty big moves down. So you're seeing this reject, reject, right? Pops up here, reject, like big move down. Pops up here, doesn't hit the 38. Again, this is after hours anyways, but then it gaps down and then look at that big rejection. Gap up, doesn't even hit that, right? So it's just struggling, struggling, struggling. Finally breaks through here and it holds. You're starting to see some more strength. You're not seeing as much volatility. You're not seeing as much downward pressure anymore. After all, the market is designed to go up over time. And so now they're just drifting their way up higher. When they hit the 50%, when they hit the 50% line of that gap, what do you get? 50% gap fill, rejection goes all the way back through the opening of that gap. Continues on, same thing, same thing. Boom. Now we got to here. We tapped, just barely tapped the green line, the underside of this gap, 25,992. This is what's left and what I call the heart of the gap over the gap. It was tapped, it rejected, it moved down pretty damn hard from nearly 26,000 just to here. This was like 330 points to pop up and move down even lower. When it made a second attempt, it didn't break the prior day's high. It couldn't get as high. Sellers were defending from here, most recent sellers too, and then it moved back down. Here's where we bounce off that daily 20 EMA and then huge move, right? V-shaped correction here and where we fizzle out and we hit right here, right? So huge objective that is hit. And in my opinion, it is really important to have solid targets that are backed by logical price action reasoning that you've determined are important. The last thing that I want to cover with this gap over the gap and how I determine this level is adjusting for contract changes. I do not adjust my charts for contract changes. There are several reasons why I don't do that. One of them being that it would just throw all my old drawings like completely out of whack. The other is these valid price levels then become invalidated and they look totally different and they're at totally different areas. And sure, they might work, but it's not, in my backtesting experience, it's not consistent enough for me to warrant making the adjustment on the chart and redrawing, what I find to be important drawings. And I'm going to illustrate that for you right now. So if we go to futures right here, adjust for contract changes, it goes, we make the change. The zones stay the same because the drawings are the same. But look at where they originate from. They would be here, right? This is the adjusted contract chart high, right, in RTH and in after hours. This was the zone that I would have drawn. It would have been from this close right here to this open. This would be the green one, right? And we would have a green zone in here, which we haven't come to hit yet, and we might still hit it. And at 250s to 276, it might still be of importance. But the point being that if we just, I mean, I don't want to delete them all because then we would lose track. So let's delete the new one I drew. These are the old drawings based off of the non-adjusted chart. This zone right here, where we topped out, if you had put back adjusting on, let's just focus on, and let's do that. Let's just delete everything else except for that zone, because like I said, this is the heart of the gap over the gap. This is what's important. Why would price action stop right here? Like you can already see, we've traded through this area several times. There's no clear and obvious zone here. Maybe you can make the argument that it's here or close to here, right? This goes up to like 30, but then again, like what happens here? It doesn't make any sense. Look at, you have this candle's high. And I want to mark that because if we follow that over, look how many times we're jumping rope over this. Like you cannot objectively say that this, and I challenge anybody, to do so in the comments if you feel differently, because I can always learn. But to me, I cannot objectively say that this is an important zone, an important area based off of all of this price action history, because like what's happening? What are we doing? Right? If anything, you could say, all right, well, we swept over this area. Yeah, we went 25 points over it. Like it's a good little sweep. We pushed over it. I will say that we pushed over last week's RTH high, but to be able to know how much we're going to potentially push or sweep before it comes starts to come back the other way and taking profit at key areas, or even taking the short if you want to risk it with tight risk, which that would have been a fantastic short, right? For me, the having the adjustments, the back adjusting on doesn't pan out well. And like I said, if you had taken that short, right, if you had just said, well, once this zone is filled, I'll wait to see what happens. This candle comes back down. Let's just say, for the sake of the argument, you entered in short on this candle, maybe not even right here, but at 26,000. By the time the market closed, we did drop about 50 points, right? So decent little short trade scalp there. All right, so that's it. I appreciate you guys for watching. Sorry that it went a little long and I rambled for 15 minutes, but I hope that this is a very thorough explanation and you totally understand how I arrived at that level. And like, subscribe, comment with questions, and I'll see you all in the next one.